Good afternoon, everyone. Thank you for joining. We will just give it a few seconds as our attendees join from, well, it looks like around the world, but predominantly from the Gulf region. Thank you for joining us today. Okay, a very good afternoon to everyone that is with us today. My name is Rania Saadawi, and I am the Executive Director of the Pearl Initiative. And it is really my pleasure and honor to welcome you to our second Governance in Micro and Small and Medium Enterprises webinar this year on understanding the challenges within small and micro enterprises in the Gulf region. Before we begin, I'd like to start by first introducing the Pearl Initiative. The Pearl Initiative is the Gulf region's leading independent nonprofit organization, working to improve corporate accountability and transparency across the private sector, family firms, small businesses, and philanthropic organizations in the Gulf region. We were established 10 years ago by regional business leaders for businesses and in partnership with the United Nations Office for Partnerships. More recently, we are one of the few private nonprofit organizations in the Gulf region to receive special status from the United Nations Economic and Social Council. The Pearl Initiative runs a lot of different programs focusing on governance-related matters. We conduct regionally based research, and we also convene business leaders, governments, civil society leaders, small business owners, and students to discuss challenges and opportunities in implementing best practices in the workforce. We also run more bespoke workshops and trainings to support business professionals like many of you as you take the lead in implementing corporate governance, accountability, and transparency practices in your companies. Today's session focuses on micro and small enterprises and startups. And as we know, during this year with the pandemic, they are looking to keep their businesses afloat and improve their resilience through unforeseen scenarios. This involves ensuring robust governance frameworks, risk management policies, as well as strategic long-term visions, even at the start of business operations. The panel discussion will feature governance experts from across the Gulf region to discuss the key challenges faced by SMEs here in the region, strategic scenario building for early stage businesses in order to have continued business resilience, and establishing actionable governance frameworks, policies, and plans, and how to embed it to mitigate future risks. With that, it is a great pleasure for me to introduce our moderators and speakers for today's session. Our moderator for today will be Mr. Samer Itani, who joined the Pearl Initiative as an expert on corporate governance, strategy, and risk management. He is a seasoned consultant with experience with Deloitte and as a senior strategy specialist for the Department of Energy and Water Authority in the UAE. Our expert panelists today who are giving us their time and expertise include Mr. Fadi Sidani, who is the managing partner of Governance Dynamics and the founding partner of the risk advisory practice for Deloitte. Prior to joining Deloitte in 2002, Fadi set up the risk advisory practice at Arthur Andersen, based in the UAE. Fadi has served on various board committees and was a member of the Deloitte Middle East Board of Directors, and is a frequent speaker on the matters of governance, compliance, combating corruption, and risk management. Fadi is also an active speaker and moderator for regional and international conferences and seminars. Thank you, Fadi, for joining us today on today's webinar discussion.
Pleasure.
We also have joining us Mr. Nadal, who currently serves as the head of Governance and Controls Office of one of the Kingdom of Saudi Arabia's mega projects. He brings over 2 decades of experience in designing and implementing corporate governance capacity building programs, developing and designing data-driven policies and recommendations, and advocating for good corporate governance practices and diversity in regional boardrooms. Thank you, Mr. Nick, for joining us from Saudi Arabia today.
Glad to be here. Thank you, Fahim.
We also have with us Ms. Shaheeda Abdul Kader, who is a management executive with 25 years of professional experience. She is an entrepreneur at heart and uses a solution-driven, analytical approach to problem solving. Her experience includes industries such as luxury, high street fashion, and retail, wholesale, oil and gas, printing, packaging, publishing, and food and beverage, also working with Fortune 100 companies. Currently, she manages her family's investment portfolio that spans tech startups, infrastructure projects, real estate, as well as the public markets. Thank you, Ms. Shaheeda, for joining us today.
Thank you. It's lovely to be here.
And finally, last but certainly not least, we are also honored to have Sheikh Fahim Al-Qasimi, who is a partner at AQ&P, a UAE-based corporate advisory and investment firm. As an advocate for strong corporate governance in SMEs, Fahim has spoken on the importance of addressing corporate governance at the outset of any venture. He believes that strategic advisory is not reserved for large conglomerates and has worked with startups and SMEs as a corporate governance consultant. Thank you, Sheikh Fahim, for joining us today as well.
Thanks, Rania. Pleasure to be here.
And thank you all to the audience. And with that, I would like to hand it over to Samer, our moderator for today's conversation, to kick off our webinar panel discussion.
Thank you, Rania, for this introduction, and thank you for our panelists for joining us today. To kickstart the conversation, businesses have been prompted to get organized and be more competitive as a result of evolving trends and requirements for strong corporate governance principles. This in turn allows these organizations to get noticed by shareholders, investors, and as well as attracting capital and other stakeholders. Many SMEs face the challenges within that and with regards to the regulations, absence of assets and collaterals, and high interest rates. And not to mention how the pandemic has negatively affected the growth of small businesses in the Gulf region. We hope today our audience will take away actionable tips from our distinguished panelists on how to successfully implement robust corporate governance frameworks to address some of the underlying challenges in SMEs. If the audience has any questions, please feel free to send them in through the QA function on Zoom. We have allocated some time at the end of today's session to answer them. With that, I would like to kick off today's panel discussion with the first question to Fadi. So Fadi, what do you think in large, like governance at large is? And what really is the greatest challenges faced by SMEs in our current economic environment?
Thank you, Samer. Very interesting question. Governance, has, for a small business, has a different meaning and different flavor. It's basically a meaning looking forward, survival. It means that you need to have the right structure to grow, meaning having the right setup to grow. It has a different meaning than it would have for big corporates, which is more about compliance. It's about policies and procedures. It's about rules and regulations and how to comply with them. When you start a business, you're mostly concerned in establishing your brand. You want people to notice you. You want people to recognize you. You're very excited when you get your first dollar or dirham. You make your first sale there because now you have established relevance to the business of the business, and people have started recognizing you. So I think governance for a small business, it is about having the right setup and structure and the right key success factors to grow and sustain yourself. That involves, among other things, cash flow management, which is really critical because, whether you have some stash of cash that you're coming into the business with, that we're spending money until you have a business model that generates revenue. It means also you're having a very effective team members, not a big team, and many of the organizations make the wrong decisions. They start building lots of structure, lots of overhead cost, that exhaust their energy and You know, so the focus needs to be more about survival, and survival here from this context means two things. One of them, keep an close eye on the cash management, because this is your blood as a small business, and also making sure that your business model is sustainable and into the future. When I say into the future, I mean today, in any business that you're in, absolutely any business, you need to take advantage of technology, what the internet has brought about. And if you don't consider that and look at things the old-fashioned way, okay, your chances for success are very slim, because the world has changed around us. I'll stop right here and give opportunity for my other colleagues to have a comment.
Thank you, Fadi, for your insight. If I can ask the same question maybe to Shaheeda for her perspectives.
Sure. So I fully agree with Fadi. He's absolutely right. Small businesses are their first priority is to survive and manage their cash flows. So pertaining to GCC, here's what I always hear: I'm not getting loans. Banks are terrible. I'm not able to manage my cash flows. Everybody's paying me after 90 days or 180 days. I cannot survive, and banks are not helping me. And here's my advice to you. This is where corporate governance comes into place, because banks are private profit centers. They are not here to make you succeed. They have fiduciary responsibilities to their own shareholders, and they are supposed to make profit while reducing their risk. If you want them to lend to you, you make sure that your financial statements are good. My dad always says, well begun is half done. So when you start, please make sure, like Fadi says, you don't have to have a huge overhead structure, but you need to make sure your financials are in good condition. Make sure you make your statements properly. Always make sure you're compliant with the regulations in the countries that you operate in. And if you have this much, most people will trust you. So if you're, and just as Fadi says, governance changes with stages of the business you're in. So if you are just starting out, please get a mentor, somebody who can guide you on what are the basic steps that you can take to make sure you are good, that you can manage your cash flow, etc. Once you start seeing your monthly revenues grow and you can see like a 5 to 10% monthly run rate, and you can see like, oh, I think I can make 10 million dirhams in sales. Okay, now you try to get an advisory board. Again, you don't have to pay them a lot. You just make sure you could even compensate them with some equity in your company, so they have a stake in your success. And then this is how you plan. And so again, well begun is half done. If you start properly, I'm telling you, investors will come. I can discuss more later as you have more questions on how I, as an investor, look at you when I invest in you.
Thank you, Shaheeda, for this input. I agree with your point of view, especially with your experience on the field of investments and businesses. Now, if I may direct the next question to Nick. Nick, based on your experience and how can corporate governance frameworks address some of these issues, which is mentioned as in cash flow, technology, and the structure mentioned by Fadi and Shaheeda, while simultaneously keeping in line with the governance codes of the Gulf countries? Additionally, can these frameworks be better enforced by the government based on the different regulations and the codes?
Yeah. So thank you, Samer, for that question. I mean, I think I've been, my career, my 2 decades of career working in the Gulf, I've been working on the one hand, working with the governments and making sure, advocating for the development of corporate governance frameworks, but most of them have been focused on the listed companies and banks. So, and those are basically, from a corporate governance perspective, are the low-hanging fruits. And from the idea is then they get cascaded into the companies that they either regulate or they're providing capital for. But in essence, for the MSMEs, the way I would look at it is, the corporate governance framework, even though it's for bigger companies, let's accept that it is for bigger companies, provides some guidance for SMEs to be able to voluntarily implement. So for example, the financial controls. So there's a lot of in the corporate governance frameworks for listed companies and banks, there's a lot of focus on the control environment. What does that mean for the SMEs? So it is basically, certainly not having to create over complicated processes and procedures, but as an owner, you need to understand, how, the money that's coming in, how are you actually creating the necessary controls that you need to embed into your operations to be able to make sure that you minimize any leakage, for example. Another thing is, and building up to Shaheeda's conversation or the initial discussion earlier, is about the investors. It's basically the corporate governance framework talks about shareholder protections and what you need to communicate as an enterprise to your shareholders. So there's a certain element of disclosure and transparency, because the idea here is disclosure and transparency brings investor trust. So what does that mean? What do the shareholders need to know about you for them to trust you? And that's usually covered in the corporate governance framework. Does it need to be regulated? Do you need to have a regulator to push for that? For the SMEs, I don't think that's necessary. I mean, you need to see the value of corporate governance, what it brings. In essence, what I call the discipline of corporate governance, that will eventually give you the necessary tools to go to the next level once you go growing from the M, basically from the S to the M, and as you grow your business. So these kinds of things actually give you the building blocks for growth.
Thank you, Nick, for this input. As a government official himself, and as an expert in corporate governance, Fahim, so people normally argue that corporate governance should not be applied to SMEs. SMEs in many cases are just made up of solo owners or founders. Should the separation within corporate governance of owners and management be shaped in SMEs? And especially if it's similar to the larger firms?
Samer, I'm so happy I'm the last to speak, because it allows me to distill some points that everybody has mentioned. And I'll throw out some key words. We talked about risk. We talked about reputation. And we also talked about what is in essence this aspiration for businesses to grow and be resilient. Let me explain very briefly how we approach corporate governance at AQ&P. We are investors and we invest in companies. And the one thing I think we can all agree on this call is that businesses are becoming increasingly complex. And corporate governance is an extremely abstract term. As a founder, when you're worried, as my colleagues have mentioned, worried about raising money, worried about getting through the crisis, worried about managing teams, worried about selling a product or a service, how do you actually come to grips with why you should focus on this? This is the hardest part of what we actually do, is trying to convince people that this is an important step for your business, irrespective of the stage. How we approach it is very simple. Businesses are becoming increasingly more complex in the services and products that they provide, in the relationships between lenders, shareholders, management, and employees. The simplest description for corporate governance are the rules, the playbook, if you will, that dictates how all of these different parties operate. The more transparent you are about those relationships, the more trust you're building in doing what you actually do. If I'm a bank and you're a solo founder and you will approach the crisis, as Shaheeda said, and now you need money, well, what are you giving? How are you building that confidence with that lender to say, trust me on how my business operates? Your financial statements are regulated by auditors and by audit organizations. And therefore, there's a sort of set of rules and regulations on what you say on your financial statements is correct, one hopes. Corporate governance shows how the organizational and management relationships actually occur in your business and give people more confidence to invest. On the topic that you say in terms of, should you have that separation from owner and management, and I'll get directly to that point. I'll give you an explanation of a client of ours at AQ&P. They approached us 3 years ago. The gentleman was 35 years old and had built a business. And he said, I one day want to retire by selling the business. And instead, we encouraged him to deploy good governance practices that help dictate the relationship between a new board of directors that we had established, him as CEO, as managing director, he sat on the board, and the relationships also within the team that he had within his organization. 3 years later, he did not sell the company, but because he had built that separation, at least in terms of governing the business and running the business, he's now retired at the age of 38, where he sits on the board of a company that he owns. He has hired professional management that he could only do because he had established those governance frameworks early on. And he was more on the M side of sort of middle-sized business. But it was for us a proof point, as Fadi says, as Nick said, as Shaheeda said, that adopting very simple steps early on really pays dividends later down the line.
Thank you, Fahim. I really agree with the separation, or it's nice to have. However, the solution could be appointing non-executives or allowing different opinions to be shaping the actual decision making within an SME organization. As an investor yourself, and perhaps maybe Shaheeda can give her insights on this, how important is having a formal board when attracting investments?
Shaheeda, do you want to go first?
Sorry. Who's going? Is it to me?
Ladies
Summer,
first. Ladies first, Shaheeda. Ladies first.
Okay, great. Right, age before beauty, right? So yeah, for me, so I help my family with investments, and I have looked at several companies in the last 7 years to invest in, and we choose very few. And one of the first things that I look at is obviously the business. And if it is a startup, okay, is it exciting? Is there growth? And if it is a private company that has stable business and maybe we just want dividends, and so we're just looking at, so once you look at the business, then we look at the management team. And here's where, to what Fahim said, it's so important who makes up the management. And I'm giving my money, I want my money to grow and should be safe. So if everything goes pear-shaped, what happens to the business? Who's going to take over? What will happen if the CEO or if it's a biotech company, the lead scientist, or where is the knowledge share happening? How are things transitioned? Who can lead if something goes wrong with a key member of the management team? So these are the things that we look at, and if those are all in place and there are good documentations and good processes in place, and we can see that, and also the shareholder agreements, the shareholder relationship, how many are there, are they silent, are they active? All these things matter when someone is coming in to invest, because at the end of the day, I want my money to grow and I want to be able to get it back. So this is extremely important. So one of the things that I'm maybe a little more particular than maybe others are, I actually like to see that the company started well. So even if they've been in business, let's say 10 years, and I want to see that they actually had some process and controls right from inception, not just in the last 3 years. It just shows me the discipline of the management team if they have that in place. So yeah, for me, this is extremely important. Of course, the cash flow, the risk controls, all of these, but the fact that they have some kind of a structure. Your question about external board, it depends on the size of the business. I don't expect like a massive, board like an Amazon board or something for a company that mid-sized company, but I like to see there's a good advisory board maybe that has been working with them for a few years. So yeah, this is, I hope that answers your question.
Yeah, for sure. Actually, this comes back with other questions. Mr. Fahim.
Sorry, just to sort of echo what Shaheeda was saying, and with us at AQ&P, we use a lot of case studies with our clients. So please, forgive me for being so specific on certain cases, but I'll give you an example of establishing a board so early on that it actually helped us get through the crisis. We invested in a company called Seafood Souk at inception 18 months ago. 2.5 years ago. And In the first 18 months, we had already established a formal board that was 60% independent. That was one of our contingencies, or one of our important factors for us investing. We actually force almost companies to do that. In doing that with 60% independent members, we had two things that happened. One, the CEO suddenly realized that there was a far more structured way of reporting to the board and then the board to investors. And it had actually made his job a lot easier on focusing on the business rather than in the early stages of a business when investors are trying to call you every 5 minutes to get an update on the company. The other thing was having the 60% independent board members. They were people that were there solely to manage risk and make sure that this company was doing well. When the crisis hit, we were in a very, I mean, the company had a very unique business model that allowed it to thrive. But above and beyond that, we could also then, as Shaheeda mentioned, raise money, both debt and equity during COVID. What did that result in? Over 600% growth during a pandemic in 1 year. And there is an absolute proof point that implementing governance early does pay dividends during the hardest times of a business.
Thank you, Fahim. I think, Nick, do you have anything to add on this conversation?
Yes, I mean, I think this whole notion of the idea of what Shaheeda had mentioned is the notion of developing advisory board. I mean, I think that's a it kind of indicates the evolution of, or the increasing sophistication of an owner, a founder, once he starts looking at developing, tapping into resources and expertise beyond what he has, right? And therefore identifying the notion of, or deciding to create some sort of a founding, an advisory board. And that basically that goes back to what the entrepreneur himself or the founder himself, where he needs to realize that he can't do everything. He also needs to realize, as Sheikh Fahim mentioned, that the business environment is very complex. That at some point, as you're growing, and it's going to be your decision in essence as to when that point will be. At some point, you need to tap into your external networks, whomever that is. Then you articulate what it is that you want this external network, you want to tap them on in this advisory board through this terms of reference, a board charter, whatever it is that you wanted to call it. But then the process itself, the discipline that you basically go through allows you to get a better understanding as to what, on the one hand, what your weaknesses are from an organization perspective, from the business perspective, and what are those things that you see the business need to kind of tap into, and then the outside expertise you need to bring in. So that, I think, is a very crucial point that need to be made for all of the MSMEs. As they start evolving, they need to think of, there is always other people that you can tap into beyond your relatives, beyond your friends. There are other experts, and you tap into, be a member of the Chamber of Commerce, be a member of business groups, etc., that you can tap into. You can get their expertise in an informal way, but you can also get them in a more formal way. And then, as Shaheeda said, you can create a mechanism where they become part of the business. By creating incentives and such. So that's another point that I wanted to kind of raise to that.
Great. Actually, I was just about to ask the second question related to the things that the points that Shaheeda said as well. As in your opinion, what kind of documentation should be provided to prove actually this credibility for the founders and executives? This is like normally credits and loans for SMEs has been an issue repeatedly raised by the SME founders. So, so in your opinion, what kind of documentation could be in addition to the risk management and the other areas and frameworks? This is to win or to prove actually the credibility in making investments or in letting the banking and financial institutes go forward with these investments.
I think, and the question is to whom?
Shaheeda. Sorry, because she was.
Okay. Yes.
The points were,
yes, great. Thank you. So for me, I'm a little bit of a finance geek. So I always look at the financial statements, and then I want the management, like a one-pager or a two-pager that tells me what % of the revenue is coming from how many customers. For example, I don't want one customer to have 30% say in their revenue. So I want the revenues to be diversified. And then I always also want to see recurring revenues. I want to see that they have a good base of customers who are always paying them, so that I can see that there is a trend and a growth. So for me, this is important. I look at if they have any debt right now. I look at their debt to equity ratios. This is can they manage, if everything goes pear-shaped, are they able to pay off debt? Are they generating any free cash flows right now? So for me, the financial statement is extremely important. Just like I look at a publicly held company, I do look at private businesses in this way. But in private businesses, I expect the management to tell me more about what risk controls I want them to write it and say, this is how we are controlling. These are the customers we have. These are the risky customers that we have. This is how we handle what is our days outstanding. I get very nervous in the GCC right now. I think a lot of SMEs say their days outstanding is 180. I don't know how you survive when you have those sort of cash flow constraints. So I'm very sad to say, but I don't invest in a lot of UAE companies because of this, because I cannot justify the risk. But audited financial statement. Here's what I spoke to a lot of SMEs before I came on this call, just my friends. And I think there is a great opportunity for Pearl Initiative to do some training in these two areas. One is actually management and financials, like basic management finance, how to do even inventory turns, how inventory turns and increasing your inventory turns has such a massive impact on your bottom line, and how you can reduce a debt because you increase your inventory turns, how to manage that. I think these two courses, just basic management and finance, I think would be great. The other thing that I learned from talking to some of my friends is they don't even know what succession planning is. And when they don't understand why it is important until I describe to them why it is, there's, oh my God, we never thought about it. And they said that it's mostly ignorance. And now they see the value in succession planning once I started telling them. So I think even just creating awareness among small and medium enterprises, especially small to medium, micro to small businesses, how important it is. They say, hey, it's just me and my brother. Why do we need success? That's exactly why you need succession planning. So I think you have a great opportunity to train and increase awareness. Like in the UAE right now has a really good startup culture, like tech startup culture. There are a lot of VCs now. People know there's a lot of documentations out there on how to raise funding, what is a safe contract, how can you, what is Series A, what is Series B, what all this. There's lots of information now on tech startups. There is there's a dearth of information for SMEs, like normal lifestyle businesses. They don't have enough information, and it's not sexy, so we don't talk about it. I think it's important to create a system or information flow where people are educated on these basic things.
Sam, I just would like to add a comment, if I may, relating to what documentation the potential investors or banks may need. I think as a startup, you're selling your future. You don't have a history to sell. There's no track record. And big organizations, sell their history. They go like for the last 5 to 10 years financial statements and credentials and stuff like that. So they have, and the financial institution and investors would build into the history or with a view into the future, but the history is a big chunk of what they're trying to sell. Plus, they typically have big assets. like buildings, land, cash, treasury, treasury bonds, whatever, that they can use as a collateral. As a startup, the only thing you have is your story. This is who you have a vision, you have your passion, you have your in your mind your business model. And what a lot of people don't fail to, in my experience, people sometimes, like people come from technology background or from a business background or manufacturing, they are very good at what they do, but they are not really good at packaging themselves well. They don't know how to make a package. Like even if you take a piece of diamond to give it to somebody, if you're not packaging it nice, it will not be, not show its value. So, and the successful people that I've seen are the people who have great sales ability. And I would like to emphasize here sales, in the sense you're able to sell your brand, you're able to sell your story, your business model. Now, no, we're not talking about things that are not of value, that have no substance. So if you have a substance, you need to go to a professional, perhaps a media company, okay? That would help you package yourself very well. We are very good at what we do, okay? But we are not very good at packaging. This is not our expertise. And what people buy a lot of times is packaging. Even the big organizations today, the biggest of the organizations, when they want to go raise funds, who do they go to? They go to big brand names, to big banks, to big consulting firms who help them package themselves very well. And this is one of the greatest pitfalls, because people think that, if I'm an engineer, have a solution for engineers, for example, that then I can go sell myself very well. Well, the people who invest in the business a lot of times are not people who understand your business very well. So it requires packaging. It also requires also to have the right KPI set in place. So you put the KPIs, for the business that you are in, the small businesses that you are in. Yes, you need to look into the financial parts of it, like return on investment, things that sort. But you are also selling Kader, your annual growth rate into the future, okay? And you need to show how you're going to do that, okay? And one of the critical things in my assessment is that the small businesses have versus big businesses is their agility. They're able to make quick decisions very quickly. And that gives them an opportunity, like Fahim has said, they have the right setup. They grew 600% during the worst time of the year last year, people losing their shirt, and this company comes make 600%. That's phenomenal. I mean, but that required agility, and that could only come from collective brainstorming through thought processes of a strong board. And I would like to just stop here, but just add one more thing. You need to have a mentor, and I think Shaheeda talked about that. You need to have, and this is not your friend necessarily. This may not be your friend, so don't talk to your brother or friend. Find somebody who is well trusted, in the community, in the business community. It could be an ex-banker, it could be an investor, or whatever, and they may tell you things which you don't like to hear. Don't let your ego, be in the way. Okay, be persistent for your growth, but if they tell you that you're not doing the things well, change behavior. And listen and make sense of it, and take proper action. I will stop right here. But, I give opportunity to my colleagues.
Thank you, Fadi. Thank you. I just want to ask. Maybe we can do this I'll open the panel actually, and so if we can go back to 2019, given what you know now about the current and post-pandemic situation, what would you have done differently in the context of corporate governance, and where do you see SMEs into the end of 2021, 2022?
I can say something here. One of the most important things in corporate governance is communication. And many companies fail to communicate effectively. When there's trouble, they don't they don't want to talk about it. They don't want to tell their shareholders. And I think this is a big miss. So when my family had the opportunity to invest in a really amazing company in India, and they're doing phenomenally well right now. And they're a biotech company. And the problem with them was they were really bad in sharing information. They wouldn't share any of their financials. What are the revenues like? What's happening? I would keep asking, and we invested a very good amount of money, and they wouldn't communicate. So what happened was, when they were in trouble and they needed to quickly raise funding, we didn't invest a second time because we couldn't trust. We didn't know what was happening. They were very good people, amazing, but just I couldn't decide to invest again. So please always communicate. Even if you took only from your friends and family, you have a fiduciary responsibility to whoever you borrowed or took money from, to tell them how you're deploying and how your business is doing. It doesn't have to be every month, every quarter is fine, but something, even it could be just 3 bullet points. This is what we're planning to do this quarter. This is what we did last quarter, and this is what we're going to do next quarter. That's it. But you need to communicate. And I think this company's, suffered more than it should have had it communicated things properly. But yeah, this is, if you take nothing away, just learn to communicate. Please. People love to help. They're not going to punish you. They're not going to, for investors, once I put my money out, it is sunk cost. So if I'm going to do again, I'm going to evaluate you again from the information I have today. And if I do not have the right information, I'm not going to invest again. So I'm just going to say that's some cost. I already made that decision in the past. So one, communicate, get a mentor, communicate, yeah.
One more comment on communication, and I think beyond communication itself, which I do agree with you, communication builds confidence. So, when you communicate proactively to your stakeholders, I mean, the shareholders here, perhaps some critical clients that you have, whatever, okay, you build confidence over time. And there will be a time when you will come to them and seek their support, okay, for either raise some cash flow or help you in a situation where you need to push to your sales and stuff like that. And if you have been totally quiet and you come to them only when you need help, that will not be reflected very well on you or the business as a whole. Thank you.
Great. Nick, would you have any opinion on that?
No, I just totally agree about this whole communication about building trust and confidence. But the key thing is, once you of course you have a responsibility, as Shaheeda said, it's fiduciary responsibility to your investors. But then you need to make sure that you keep up with the frequency of that communication. You just don't communicate to your investors or whomever it is that you're asking money when you need money. You need to keep it. It is a relationship. It's a relationship. In essence, what transparency and disclosure is about is you're building a relationship of trust. And how you build that relationship of trust, it is actually over time. And that means you need to be consistent. You need to make sure that you're, of course, telling the truth. It may not go for you, but it is over time, and you need to be consistent through the process.
Thank you. This will as well give us some insights on if you, Fahim, if we can turn to you. When you think about the current challenges and the points that Fadi and Nick and Shaheeda discussed, do you think as well, in terms of information disclosure and transparency and integrity, do you believe that SMEs could benefit more from, and this will allow as well partnerships with other small businesses as a strategy?
Look, I think the way we've always worked with our clients, our investee companies, and in companies we have almost founded on the back of trying to promote better governance, we've always split it in explaining it to clients that governance is 2 things. One, it is structure. And I think that's where people turn to first, as in, I need a board, I need a governance code, I need to have board members, they need to be diverse, they need to be independent, they need to be non-executive. And that's the structural part of corporate governance that has existed since, you know, the formation of the concept in the late part of last century. What we're more focused on now as a firm is what we call the functions of good governance. And the functions can exist sometimes without the structures necessarily being formulated. Let me give you an example. Today, we have a company that is predominantly focused on one key function, which is risk management and that transparency that you're talking about. Today, the biggest risk, if you ask me sort of to the last question as well, what would I have done in 2019 differently? The biggest risk to any organization today is internal. My humble opinion, the biggest risk to any organization is internal. It is how your teams, your management, your employees, how they operate. What we need to start thinking about in the world of governance and in the world of SMEs is how do you actually start managing these risks better? How do you start implementing better functions, governance functions, to be able to have that transparency, not necessarily outside of the organization, but within the organization? And that links to this bigger topic of not necessarily partnerships that you talk about as an SME with other SMEs, but for you to succeed and for you to grow today, business is becoming complex, as I mentioned before, but also supply chains are becoming increasingly complex. Gone are the days of you producing something and selling to one client or two clients, and that is your entire business model. You now have suppliers, you now have a supply chain, you have buyers, you have multiple buyers. Sometimes you are sitting at multiple parts of that supply chain, and therefore there's going to be an increase in risk. And if you want to be part of a supply chain of a much larger organization, I'll give you a very simple example. AQ&P is in discussions with one of the largest oil and gas companies in the region, where they were talking to us about using this technology specifically because they see risk within their supply chain. They see these small companies not being transparent enough, and they want to make sure that they're deploying technology or the tools that we're providing them so that they can manage that risk within their supply chain. Now, for a second, think of yourself as that SME that wants to sell to a company that is one of the largest companies in the world. You have to start thinking very carefully now that they're going to look at you with a fine-tooth comb and make sure that you have all of the things in place to be able to do that. So, you know, going back, yes, in 2019, I would have encouraged more companies and more of our investee companies to think about that. Because when times get tough, they will look to the most resilient companies within that supply chain and only work with them. And if you had those things set up at the outset, as Shaheeda mentioned, if you were communicating at the outset to say, our business is doing fine, we have doubled down on making sure we are transparent, we are still able to deliver our products and services, guess what? If I was buying from you, I would continue to buy from you, you know? So it's not easy, you know, and maybe I'll end with this. It's very easy for us here to be sitting as people that have worked in the governance space, that are investors, to turn to somebody that's just about to start their business and say, you know, apart from trying to build a business model and raise money and hire people and, you know, pay school fees for your children if you are a parent and do all of this stuff, you also need to invest in governance. But then find, as many of my colleagues have said, find somebody that's going to help you go on with that journey. And my biggest advice to everybody at the outset, I have a firm, we charge money for this, you may not have the money to pay for it. The Pearl Initiative does not. The Pearl Initiative has endless amounts of resources for you to be able to at least start the journey. Start learning what would help your business at the start. The website is there, the resources are there, the videos, the links are there. That's where I started my journey when I started my firm with the Pearl Initiative many years ago. And that would be, you know, as we draw up to a close, would be my first advice is at the end of this call, if you are inspired, go straight to the Pearl Initiative website.
Thank you, Fahim, for that. I would like as well, I would like to say as well, like investors or ask maybe Fahim or Shaheeda as well, or even Fadi would be as well to answer that. Investors are becoming more social responsible in their selection process for all the investment opportunities or within our organizations. Are we at the stage in the Gulf region where ESG frameworks and SDGs or even diversity mandates need to be at the center of the business operations to attract investments? Or
If I may answer this one, it's a at the very early stage, and I don't think at this point in time it's a driver for investment. It's a driver for better practice. It's something that I would suggest be built into the fabric of the organization very early on. So you would want to work on the diversity, on values. You can't just embark on all kind of sustainability initiatives at the same time, but I think you can at least you say, okay, we are, you know, we don't distinguish between men and women in terms of pay. We sponsor certain things that, you know, are of value to the community that we have. Okay, so it could be one or two initiatives that you take on that are priority for your community, and build into and live them. You know, actually, you don't do it for advertising purposes. You do them because you believe they are the right things to do, and it will grow with you. Now, whether a lender or an investor will invest or not invest in your business because of that, I doubt it at very early stage. But they would like at least to know that you are neutral to it, that you don't have any big issues relating to values of the community or global initiatives that are well known to everyone. So that is these are my 2 cents into with regards to this matter.
Thank you, Fadi. I think Shaheeda would you like to?
Yes, I will just add my 2 cents. So for me, we started doing investment, you know, do well by doing good. So we try to find companies that are aligned with our values and everything. But I'll tell you right now, as Fadi said, it is not a ESG as we define it is not the main priority. For me, as a business that employs 100 people, to me, they're good. They are giving back to the economy, they are giving salaries, and that itself is to me very socially responsible. You have an establishment that employs people. For me, this is good. But I will tell you one great thing that I learned from just talking to friends here. When I asked them about their ESG, I already told you what they told me about the G part. The E, they're not really looking at, but the S was really cool because they said because they are in GCC and zakat is such a big thing that everybody talks about and it is part of the culture here, even though most of the SMEs that I talk to are not, let's say, Muslim owned, they say they do social work, they do support the communities, they donate because they say it's the fabric of the society that we live in. And so I was very pleased to hear that all companies think about it. But as a lot of the population in the UAE is from Asia and Eastern Asia, in our culture, it is not normal to talk about what we give, so they don't advertise it. But I think most companies here do their part for the community. They just won't advertise it.
Can I add something and say something maybe a bit contentious on the topic of ESG, and maybe have something to form a prediction if it happens? I think the term ESG will die. I don't think it is as effective as it could be. I think the world has evolved from CSR to using the term ESG in terms of a catch-all for impact. It has made a lot of banks and a lot of consulting firms money in giving people ratings, but I don't think that it is mutually exclusive and cumulatively exhaustive in terms of how good a company is. You've got fantastic companies in the region that are doing phenomenally for the environment, but are you going to score them down if they're not also doing something socially for people, or may not hit a governance code that you have decided is better than another? Similarly, as Shaheeda just mentioned, I'm doing so well for people, but I may be in an extractive industry that is then, not doing so well for the environment. Well, how do you actually compare that? Because that's not apples and apples, that's apples to pears. I think what I will take away from what companies have done well in the region, and it's linking to what my colleagues have already said, is communicating how you are a good company, what you are doing for the community. And I think that unfortunately, this term ESG has, the jury's still out on what it means and how it's measured. I think as consumers, as investors, as stakeholders in business, we need to think about other ways to explain to our other stakeholders and our consumers how we are doing good for the world. But to bucket it into 3 letters, that I don't think it has a future. And forgive me for being so contentious, but you know.
No, I don't think
point.
so. I think it's, you know, I'm an ex-KPMG consultant. And my first day at job, they gave me a huge binder filled with acronyms to memorize. I'm done with acronyms. Let's just do good.
Great,
I think
thank you.
in my view is just new businesses add to the community. They create jobs. They create funding opportunities for investors. They just have a lot of good to do. I would not be stuck with the acronyms and I think the focus should be on your survival. Survive the first 3 years, and I think that is very important. You need to survive and thrive, and this requires you to do a lot of things. You know, if I may just in 1 minute just give some ideas. So make sure your business model is tested and works well, okay? And make sure it is resilient. Make sure that you are technology enabled, in the sense that because technology, internet gives you scale, okay? And today businesses grow because they have scale. Amazon grew because they have scale, you know, and all the businesses grow because they have scale. And if you're not using that kind of scale, you're still doing retail old-fashioned way, you will not have a chance to survive. Make sure you have enough money early on to sustain the business, you know, because if you start with very little money, you know, and this is what poor cash management sometimes happens. You start with, say, like $50,000, and you need $200,000 to be able, regardless of the profitability of the business, but you need enough cash to grow, establish yourself. Avoid unnecessary costs. Head of today, in this day and age, for example, Deloitte say today, people can work from home. These are huge organizations. You don't need a big setup. You don't need big offices. You know, you may need a very small setup that would allow, you know, remove bad apples from your team very early. If you have any toxic people, regardless how productive they may be, if they bring in negative energy, get rid of them early. Make the call very early on, and make sure you have proper sales mechanism in place, because what's going to help you generate cash is sales. If you don't sell, you don't have cash. And a lot of people worry very much about their internal processes, systems, policies, procedures, business model, which is great, but you don't need sophisticated policies and procedures the very on. Make sure your business model works very well, okay? And focus on sales. And if you don't know how to sell, and there's nothing wrong with that if you don't know how to sell. A lot of people are very good at what they do, but sales is an entirely different skill. But you need to get help to push your sales moving forward. And make sure you retain at the flip side of it, make sure you retain your most valuable players, okay? Because you may have very good team members. Protect them, give them shares in the business. If you have to, give them a stake in the business. That's what will make them stay, okay? And just seek help when you need it. Consult with people who have been successful. And in my experience, when you go to anybody, you know, for help in general, I mean, you're not going to big consulting firms where they doing. But if you go to Nick, I say you need help. You need to go to Fahim and you need help. Okay, I'm sure. I'm telling them, listen, I'm a startup. You're not going to do this one for free for me. I would like to believe that they will do it, including myself. They would help you for free. So seek help when you need it, through the Pearl Initiative or through professionals. And I'm hopeful that you will get the help you need. Thank you.
Thank you. Any more points? I think I want to thank everyone for their valuable insights. And if we can move to the Q&A section, if there's any questions from our audience.
There are 2 questions I see in the Q&A.
There are more statements, I think.
Yes.
Questions.
Yes, I think yeah, we need. I would. Yeah, it's an excellent discussion that we have. I think we've answered mainly most of the questions that are important for corporate governance and the MSMEs. And I would like to take this opportunity to thank all the panelists here today for your wonderful insights again. And we know that addressing SME challenges at the root of the problem through strong governance has good impact on any firm operations and its reputation as well, thereby playing a critical role. Yes.
I just would like to, I'm sorry to interrupt you, but something came to mind. There's a movie that came out some time back called The Founder, which relates to the McDonald's business. Many of you may have seen it. If you haven't seen it, you may want to see that. Okay, and talks about how McDonald's started and how it evolved to be the big business that it is today. One of the critical things that came across, which was to me, it was like not watching a movie, more watching a conference of sorts. But it is at some point that somebody came and gave them advice that you are not in the business of making hamburgers and what have you only, you're in the business of real estate. And they did not have that kind of perspective. And once they had that kind of perspective, it changed their mindset and made them a lot of cash. They were struggling for cash at the very beginning. They were always short. Okay, once they had that kind of mindset change, it transformed their business. What I'm trying to say here is that you may have insights coming to you from board members, from mentors and stuff like that, but please seek help, and consult, and do watch the movie. It's quite entertaining as well. Over to you, Samer. I'm sorry for the interruption.
Thank you, Fadi, as well. To be honest, it is very important to continue on having these conversations and pushing the needle forward on corporate governance as meaning for the long-term growth and resilience. I really want to invite our audience to fill in the Codex survey, which was distributed earlier in the post registration email. This will assist in their corporate governance research, in our as well corporate governance research, and it will be posted on our Zoom chat now, if we can go forward with it. And I really want to thank you all again, thank our audience, and it's over to you, Rania. I think Rania will not be there. Thank you very much, everyone.
Thank you.
It was lovely meeting everybody.
Thanks so much, everyone. Take care. Bye.
Bye.